Hi, Stephanie Evelo here, the Evelo team at Keller Williams Realty, and I've got special guest Bob Warner, our senior realtor partner and research specialist, is what I like to call him. And we are doing the monthly real estate market update. Bob, take it away. What happened in the local market here in January?
Yeah, let's just kick right into it, short and sweet as we can here. So first up is that median sales price. So we ended January at 297,750. So that was up 2.7% over last year. So pretty consistently in that like 2 to 4% range now for the better part of a year or more. And then cumulative days on market. This one's a little bit more interesting. We'll hear 2019 and 2018 a couple times in my presentation today. So we ended January at median days on market at 40. That was up 25% over last year, and that is the highest it's been since 2018. So 7.5 years since we've seen it that high. Similarly, that month supply of inventory, again, historically, a balanced market has been considered a 4 to 5, 5 to 6 month supply of inventory. We have actually creeped up to 3.4 months supply of inventory, which is 26% up year over year. And again, we have not been that high since January of 2019. So almost 7 years since we've been that high. And if you sort of look here, 2020, 2021, 2022, we fluctuated around a half a month supply of inventory for that near 3 year period of time. So some big changes on that front. And then we always like to look at that percent of list price received. So on average, homes in our market are selling for 97% of list price. Again, real estate is always very hyper local. There's always different things that drive into that. There's certainly still homes that sell for above list price and go into multiple offers. And likewise, there are homes that sell for greater than 3% off the list price. But just as a whole, that's always a good metric to look at just to give us an idea of the landscape overall.
Yeah, and I think it's so important that buyers and sellers look at all this data and really know and understand this before they're, going into the market and what they're looking to do, buying or selling, right? What to expect and what to be prepared for and with. But yeah, so we've been sensing and feeling the shifting market for sure. And so what additional items have you been following to track the shifting market conditions?
Yeah, well, we hit on a couple of them that shifted a little bit more than what we've been seeing, but some of the other ones we've been tracking are that active inventory. So we ended the month of January at 5,500, which is obviously down from, the peak of the summer and fall where we actually crossed 7,000 for the first time in a long time. But that's as high as we've been in January again since going back to like January 2020, 2019, that time frame. So seeing a consistent story there. We're going back to numbers that were more like 2018, 2019. That total closed sales for the month of January ended at 1631. That was down about 7% year over year. And new listings, we ended the month at 2457. That was actually really flat at 2460 this time last year. So interesting to see those two numbers are almost equal. And then the
Identical.
last
Yeah.
one we like to take a look at here, we always look at, we look at the average list to sales price ratio. But as we mentioned, there's always a percent that closed still above list price. So it's always interesting to look at that as well. In our market overall in central Indiana, we had 11% of the homes that closed over list price in January, which was pretty consistent with where we were last year, but down about 12% overall.
Wow. Yeah. So tale of two stories. Last week we listed two properties. One did get multiple offers and going to be selling over asking and closing out over asking. And the other one still for sale. But it all has to do with marketing strategy and pricing strategy. So yeah, really, really important looking at that, from a seller standpoint. So what about interest rates? What are they looking like these
Yeah,
days?
so we ended last week at, again, big picture, just average for the market overall at 6.11%. That was down ever so slightly from when we did this presentation last month. I think we were at 6.16. So again, there's a lot of variables that go into that. So just keep in mind, this is the average. You could see something higher or lower, and those interest rates legitimately change every single day. So most of the stuff I see coming from lenders with updated rates each week have us in the, the low sixes right around here. We've dipped into the very high fives a couple times, and it seems like we are set up to pretty consistently stay in the very high fives or low sixes for the foreseeable future. And just a quick reminder, that's about 1% overall down from where we were this time last year. So a big difference from where we were this time last year. But we pretty consistently have stayed in this low six range for the past several months.
And I don't know if you want to recall something you shared at the team meeting this last week about you just some buyers that you have in a certain segment, and wondering if that interest rate is maybe attracting first time home buyers.
Yeah, I mean, I've just sort of seen, at least personally, like an uptick in first time, slightly younger home buyers at the beginning of the year. And if you think about where we were at this time last year versus where we are today, maybe that percent difference has made enough of a difference as they look at and think about purchasing a home. I know last month during this presentation, we just did like a general, 1 percentage point on a $400,000 house is roughly a $300 a month difference in payment. So that's pretty significant, and obviously that changes depending on the price of the home. But you just sort of start to wonder if that is having some impact on maybe those buyers that were on the fence. And if you're one of those, would love to talk, just like I've chatted with those people, and see if we can find you a great home here in 2026.
Yeah, absolutely. Absolutely. So any final thoughts about the market as a whole?
Yeah, we always like to end with something, right? So as we get close to Valentine's Day weekend here. So, some relationships are certainly meant to be short term. Maybe that would be renting, right? Not really meant to rent forever, but maybe some reasons to fall in love with home ownership. We obviously get some security and stability from owning our home. We get to customize that space and make it exactly what we want. And then obviously the wealth building benefits of owning your own place. And just like we alluded to a couple minutes ago, by all means, if you're thinking about breaking up with renting, right, let's connect this year and see if we can get you into a home you love and start you on the path to homeownership.
Yeah, and if people are on our newsletter, if you're not, you can sign up for our newsletter. But yeah, not newsletter. That's what I said. I said if you've fallen out of love with your current home, right? If you're not just in love with it and looking for something different, obviously they can and reach out and we can assist. So, well, thank you so much for joining us. And if you have a real estate need that we can assist with, let's connect. And you can always contact us at info@eveloteam.com or calling us at 317-863-9011. And our entire team is waiting to assist with any and all of your real estate needs. Thanks so much. And as always, make each moment count, and happy Valentine's Day. Bye-bye.
Bye bye.